Good morning. This is Lance Bryce with Thrive Mortgage. It is Monday, February 25th, a little after noon. This is your weekly rate update. We said this last week that the Fed, and the language from the Fed and the actions from the Fed has really taken what had been a very normal pattern of bonds moving to the inverse of the stock market and kind of turned it on its head. So I did a little bit of prep this morning to demonstrate that. If we go back to how we started the month, the Dow has rallied just shy of 1,000 points going back to the 1st of February, and yet we've seen interest rates not move one bit during that time frame. They're exactly where they were. They're within 2 basis points of where we started the month. And that decoupling really begged for answers on why we weren't seeing a move higher in interest rates, even though the Dow is continuing this New Year's rally. So some of the answer can be found in some actions that the Fed has taken and that they announced this last week. On Wednesday of this last week, the Fed announced that they are putting on hold the sale of so many of the bond assets that they've got on their balance sheet. Currently, the Fed is holding just shy of $4 trillion in fixed income securities. And one of the things that have been driving rates higher over the last year is the Fed selling those securities that they had acquired throughout the whole quantitative easing piece, creating false demand in the marketplace by printing money. Everybody's aware of that whole scenario. Well, that left the Fed with a tremendous amount of fixed income securities that they are now selling. They've been selling those at around, I think it's around $30 billion a month. They announced on Wednesday of last week that they are putting that sell on hold. That's going to limit the supply of fixed income securities, and anytime that happens, that affects the demand curve. We see prices start increasing again for fixed income securities, or at least staying the same in the face of the Dow strength that we've seen. And that's what's been holding rates steady, even though the Dow has been rallying. It's all about the Fed saying, you know what, we're going to wait and see, and we don't want to influence rates higher when we might be looking at slower times ahead. So that is really putting the brakes on interest rate hikes. I don't know how much it has in the way of legs. This is still a very good time to lock in an interest rate, with us still being in the fours pretty much across the board for well-qualified borrowers. It's a terrific time for them to buy some lock insurance and get locked in with some of the long-term lock products that are available to them at the industry level. Certainly we have our own that we're very proud of here. Hope this information is helpful for you and your borrowers as you strategize around their purchase. You can reach me at 210-260-9660, or you can find us online at brycehomeloans.com. As always, we appreciate your referrals. Hope this was helpful. Have a great week.